Ladies and gentlemen, boys and girls, and children of all ages, you're now tuned in to the Investor Show. What is a bond? In this video, we're going to talk about what is a bond and how to trade them with E-Trade. So it's going to be a simple and quick video. We're going to talk about how to buy a bond right here with E-Trade, and then we're going to get into a more financial literacy topic. So y'all stay tuned. But ladies and gentlemen, if you haven't done so, go ahead and make sure.
Hit the subscribe button, hit the bell icon, hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time. So we are going to jump straight into it. So in this video, I'm going to run straight through and tell you what a bond is, and then we're going to talk about, you want to hang around later, we're going to talk about how it works and different things. So what you're going to do, you're going to log into your E-Trade. Up on the E-Trade, go to trading, then go to bonds and CDs. Go to trading, then go to bonds and CDs. Once you go to bonds and CDs, it's going to bring you to the screen. This screen here has an overview of bonds. Then it's going to go into investment grade bonds, high yield, municipals, or if you want to search and trade. Let's say if you're looking for investment grade bond, you're going to go here, boom. These are the big corporate bonds. Some people call them corporate bonds too. High grade is considered corporate bond. Now you're going to stroll on down. Once that come up, you're going to stroll on down. Right here, they got Goldman Sachs, General Mills, USB, Target, Western Union, all of the good stuff. So let's say if you want to buy one on Goldman Sachs. You click on the GS. Now, once you click on the GS, this is all the Goldman Sachs bonds that you have open to you. Now, you can go to it. It has the coupon on it. It has the maturity, all of the good stuff. You're going to hit buy. Hit the buy button. That's how you can buy a bond with E-Trade. For particular, this is how you're going to buy a bond with E-Trade on Goldman Sachs. Now, some people that may be tuning in may turn around and say, Prince, what is a bond? A bond in stocks, a bond is about pretty much you're buying somebody else's debt. This is Goldman Sachs. They're trying to raise money. You know, Goldman Sachs may be trying to raise, let's say, $1 million to, I don't know, build a new building or whatever, hypothetically. So they say, hey, guys, you know, not can people, but they say, hey, would you let us borrow some money? And in return for you letting us borrow money, we're going to pay you back with interest over the next 5 years or 10 years. The interest that they pay you back in is the yield. So right here, you see the yield, right? So you're going to see the yield. How long they're going to take to pay you back is your maturity. I'm sorry, that's the coupon. So the coupon is the interest they're going to give you, right? So when they say, hey, we're going to pay you back with 10%, with 5% over the next 10 years, maturity is when you're going to get them the $1,000. They're going to pay you back. They're going to pay you back with your yield over the next 10 years. Then after the 10 years is up, they're going to give you your principal back. So let's say if you gave, let's say hypothetically, I gave Goldman Sachs $1,000. I bought a $1,000 bond with a 5% coupon. Over time, every month, they're going to pay me, not every month, but every year. Sometimes bonds pay year or semi-annually. They're going to pay me the interest over the next 10 years. They're going to pay me interest. At the end of the 10 years, they're going to give me my principal back. So as an investor, you collected the interest plus the bond. That's how a bond works. Now, the next thing I want to talk about is the risk. What are the risks you have with the bond? Make sure I put this in here. What are the risks? Every investment comes with a risk. So we're going to talk about that. What are the risks with a bond? And this is how you get the different types of names of bonds as well. So if you're catching this live, say hello. I will get to the live comments once I'm done. So right here, ladies and gentlemen, you're going to say, what are the risks with a bond? The first thing is the person who gives you the bond can turn around and not pay you back, right? The person you give the bond to, you could turn around and not pay you back. For prime example, let's say Goldman Sachs. What if Goldman Sachs goes bankrupt, right? So notice up here, bonds have ratings. So when you look at a bond, they have ratings. They have credit scores, I like to call them. So they can be rated with as a a triple A bond, a double A, a regular A. Then they can go down to BBs. They can go all these. They have rating scores. Pretty much, they have a credit score essentially. So bonds have a credit score. A lot of people, investors, like to use this to see how sturdy a company finances are. So when you look at a company, they have a credit score to see what's the likelihood that they can, what is the likelihood they can pay you back. The higher the credit score is, the lower the interest they pay back. For prime example, if you have an 800 credit score, that means you are a low risk. We all know in the investing world, and in general, lower risk means lower return. Now, if you're a company with a low credit score, that means that they're going to pay a higher interest rate. You're going to collect a higher interest rate, but guess what? You have a higher chance of this thing going bad. So investment grade are the companies with the highest credit scores, right? High yield corporations, these are companies that have a lower credit score, which sometimes people like to refer to as junk bonds. Municipal bonds, these are the highest of the highest grade because this is the government. Municipal bonds, or some people call them munis, muni bonds, what they do, this is usually issued by the government, a city, or something like that. For prime example, the city of Denver may want to build a new stadium for the Broncos. So they go out to the public, they issue a bond, a 20-year bond, and they're going to pay you back on a 5% coupon, 5% interest. So every year I collect interest, and at the end of the 20 years, I'm going to mature. When the bond matures, then I get my principal back. So I collect interest throughout the years, and I get the principal back, right? So you have muni bonds, what people call junk bonds or high yield bonds. Then you have investment grade bonds. So investment grade municipal bonds are usually the lowest risk because that's the government. The next higher risk level is corporations with a high credit score because corporations fail all the time. And then the high yield bond, the junk bonds, these are the smaller technology companies. They pay a higher return on investment, but they can fall back. All right. So hopefully y'all got something out of that. That's going to conclude this episode. Let me see what y'all saying in the live comments before I roll out of here. Mr. DR Briggs, how you doing there, sir? He says, howdy. Hopefully you caught that video. I did do a review of your WLMTF. So thank you. Thanks for checking in. Miss Ruby, how you doing right now? Glad to see you out there in Memphis, Tennessee with her Apple and Tesla. I still remember, even though those companies have kind of fell off the map almost, it kind of gotten very quiet. Big Al, what's going on? He says, Al, Principal Investment. Good afternoon, brother. Good afternoon. Thank you. Ms. Ruby says GSSQX. I'm thinking that's a stock symbol. I'm not sure who that is. I would have to come back to that one. All right. So anyway, ladies and gentlemen, in this episode, we pretty much showed you, I did a step-by-step tutorial in the beginning showing you how to buy a bond with E-Trade. And then we talked about what a bond was. And then we looked at the risk with the bond. And let's talk about a bond versus stock. A bond versus a stock. A bond is looked as being more conservative. This is for people who are trying to conserve money, who don't want to take a whole bunch of risk on the market. You made your millions of dollars. Now you're just trying to conserve it and grow interest off of it better than a savings account or a CD. But you do take some risk on. Versus the stock market is more volatile. It reacts to all the news that comes out. Versus a bond is a little bit less volatile, way less volatile. And I gotta get into this too. It's way less volatile than stocks are. So people with bonds are people who are limiting their growth and taking less risk. Now, also, when I talked about the risk, there's an interest rate risk. As interest rates go up, bond values go down because people move their money around due to interest rates. So what the federal government does with interest rates affects bonds directly. Keep in effect of how interest rates affect with bonds. All right. Let me get ready to get out of here. Let me see what y'all are saying in the comment. DR Briggs said, I did. It was great. I'm glad you liked the stock review. Appreciate it. Max B, what's going on? He said, that was great. We'll do future shows on bond. Will you do future shows on bonds? Okay. I can look at some future shows on bonds. B Mac, what's going on, Brian? He says, what's up, brother? Got a nice option on CCIV. Okay. Making some money on an options trade. Look like you maybe had a put today. I don't know how CCIV did. That's Moody says, just got put on to you by my man, Will. I've heard your fellow shipmate. I've been following from this day forward. Thanks for coming. Thanks coming from San Diego. Okay, San Diego. That's Moody. What's up? Okay, appreciate it. We'll put him on. Okay, all right, cool. What's going on, Duck? He's out of Duval, Clay County. All right, I thank y'all for tuning in. I gotta run out of here. Hopefully y'all guys tonight this video. Until the next video, podcast, cartoon, or whatever is crazy you see me do around the globe. Peace. Be safe. I'm out. Thank you.